Hey everybody, today is December 20th, 2024, and today we're going to talk about the stock market and where I see the stock market headed for January 2025. Before we begin, please read the disclaimer and pause the video as you read it. Okay, this year, this is going to be the last video of the year, so I'll probably make the next video next year, so just in advance, Merry Christmas and Happy Holidays and Happy New Year as well. Yeah, this year has been a pretty good year, right? I mean, we've had a strong rally with a couple pullbacks, but nothing major, right? So far, this bull trend has been intact, right? We're making higher highs and higher lows off of the 2022 correction, right? Here, broke out over here, sorry. And we had a bit of a pullback in 2023, but for the most part, it's pretty much been smooth sailing, right? Now, so where we left off last time was late November, and my prediction was basically that I was bullish for the month of December, right? This was coming off of the Trump win for the presidency, right? And I said that was going to be bullish because, of course, when a Republican's in office and Trump is promising to cut taxes and put American business first, then of course the market rallied, right? And then we had a bit of a pullback to sort of let some steam out, foot off the gas a bit before rallying higher. And so basically my prediction was that I felt like December was going to be bullish. Now, of course, we had a bit of a pullback over the last 2 days. So why did this happen, right? One of the things I said that is that there are a couple of headwinds going in. Just to summarize, we are uninverting for the 2 and 10 year. We have a yield curve. We were inverted since middle of 2022. So this is the longest time we've had these yield curve inversion since the 80s, right? 70s and early 80s. So every time it uninverts, we tend to have a recession, right? And this is the shaded area. So this was something that I talked about in my last video that is a small concern. It's nothing major. It doesn't mean it has to happen right away. It's just something that it's good to think about, right? It's not something we should put aside. Same thing when the Fed starts cutting rate, which is what we've been doing since this year. They started to cut rates, and so now we're down to 4.64. And just recently, right, this week, they announced another 25 basis points rate cut. So why is the market pulling back, right? The reason why the market's pulling back is that after the Federal Reserve notes, after Jerome Powell said that they were cutting rates, he basically followed up by saying that he believes that next year they're not going to cut rates as much. And that really shocked the market because the market really believed that they were going to keep cutting rates, right? They were pricing in 3 to 4 rate cuts at the minimum. So now they think that it's going to be a lot less, right? And part of the reason is that we've seen inflation tick up over the last 2 months, right? We started out the year kind of bumping up a little bit for 2 months till March. Then we started to see this nice downtrend. For several months in a row, we saw this nice, disinflation, right? Which is where inflation is starting. It's still high, but it's starting to decrease over time, right? The problem is that starting in October, we saw the report for September, which was 2.6, and now we recently saw a smaller, increase. Nothing major, but this is concerning the market. Now, I don't think it's that big of a problem because it's not out of the ordinary to see a bit of a uptick in inflation as we continue down, and I think that's what's going to happen. We're going to continue down to 2%, right? Which is the Fed's target rate, and we'll get the next report in January 15, which I'll obviously update in the next video. But I think what the Fed is doing is that they're being conservative, which is what they usually do, right? They don't want to take action prematurely because their actions have a lot, like huge consequences for the economy. So this is part of the problem that they had was they waited too long to raise rates in 2022, right? And that caused inflation to run premature, and then they had to sort of aggressively hike. So in 2022, we saw them hike interest rates at the fastest rate in history, right? And so, or at least since the 80s, right? Yes, over here. So in the 80s, we aggressively raised interest rates to basically get us out of stagflation in the 70s, right? So now they're raising rates, they're lowering rates now. Now that inflation has backed off, right, over the course of the year. But because it's rising a little bit, I think the Fed is just being conservative. And this was just guidance. It's not like they're committed to only cutting rates. It's not like they're actually committing to only cutting a few times next year, right? They're open. This is just forward guidance, and so that could be up to change. If inflation does decrease more, closer to 2%, they could definitely cut rates more, right, next year. So I think that sort of shook the market a little bit. But right now we're having a nice recovery, right? Nice 1-2% day. The Dow's up a lot more. But then again, the Dow's been hit pretty hard, right? But if you just look at the technical structure, and I'll just get a clean chart, this is actually not that bad, right? We've sort of been away. So the way it works is that these moving averages kind of give you an idea of the ascension of the bull market, right? And usually you want the price action to stay close to these moving averages, which is the silver line's the 50-day, the gold is the 100-day, and the blue is the 200-day, right? And that gives you an indicator of how overbought or oversold the market is, right? And you see how in a healthy uptrend, we tend to have these pullbacks, right? And what we saw, in hindsight, right, which might not have been obvious at the time, was that after COVID crashed and we recovered with all the stimulus checks coming in, the market basically ripped up, right? And we basically had a correction in 2022 where we came back down and held the 200-day moving average before ripping up higher, right? So in hindsight, back then it seemed kind of scary, like, oh, is it over now? Is it going to keep going down? Are we in a bear market, right? But it was just a healthy correction in the longer cycle, right? We've technically been in this sort of like secular bull market since the bottom of the financial crisis, which is March 2009, right? We're here. And every once in a while, we'll have a big, 20%-ish correction, And so last time was COVID, last time was 2022, but before that was COVID, right? So after that, we kind of just, but you can see how after we came out of COVID, we had this V reversal, which just accelerated significantly with the stimulus checks, right? So we sort of had to cool off in 2022 and then continue up higher, right? So we might actually have another year or so where it just goes up, but I can see another correction of 20%-ish somewhere 2026, 2027, because that's just part of a healthy market, right? So we just look at the daily chart, right? This pullback, it might look scary because this was a big red candle, right? 2-3% in the S&P. That's pretty big for the S&P, right? And the VIX too, right? The VIX spiked, right? You can see there was a big intraday spike, 73%, right? All the way just below 30, right? Once the VIX gets over 30, things are going to get crazy, right? But thankfully, we didn't get over 30, and now it seems like it's coming down a little bit. It's trying to cool off a little bit, right? Another thing that's happening right now that will probably get solved is the government is going to shut down if they're not able to come up with a deal by midnight tonight. But they're probably going to come up with a deal either tonight or over the weekend, right? Because that's usually what they do. It's usually just political theater. But yeah, so that might be putting a drag on the market. But for the most part, I'm not too worried about that in general. But yeah, so I talked about that. I talked about the headwinds. Talked about the interest rates being cut 25 basis point. So overall, I'm pretty optimistic. We're probably not getting the Santa rally that we wanted. In a lot of ways, we kind of did we just got it prematurely, right, in November after Trump won. But yeah, everybody's expecting Santa rally, so maybe that's priced in already, right? So I do expect us to kind of chop sideways, defend this level before moving up higher. In January, when Trump gets inaugurated, by the end of January, I do expect the market to hit all-time highs by then and to continue up higher, right? So maybe chop sideways, defend this level, defend the 50-day, right? And that's what we're doing right now. We fell below the 50-day, which is our short-term moving average, and now we're basically just above it, and we need to basically fight and to defend this level, right? And that's probably what we're going to do for the remainder of the year going into January, right? And that's probably what's great for a healthy market. We want the price action to stay close to these moving averages, right? And we're above the Fibonacci line. We can see the RSI now is in just below neutral, so we have all this room, right? We're kind of like getting close to that overbought zone after we had the Trump rally, after he got elected. So it's good to reset the oscillators, right, and give them room to run up higher, which will give us more steam to rip up higher to new all-time highs, instead of it just being all-time high, and everything being overbought, right? So this is how the market, it kind of moves in cycles, right? So everything looks really good. To me, this is just a healthy pullback, and I'm very optimistic about 2025. We had a great 2024. 2025 looks like it's setting up to be another great year with a pro-business president coming into office, and interest rates. I think, for me personally, I think that inflation CPI is going to continue. To me, this is just a temporary, just like we saw here, a temporary bounce higher, and then continue to fall, right? And that's what we're going to get closer to 2%. I think the Fed is probably going to change their tune. If they start seeing inflation come down, they're going to start cutting more than they guided in the most recent meeting, and that should give more fuel to push up higher. Could be wrong, but we'll definitely update you seeing, depending on how the data develops going forward. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate your support. Thank you again, and have a great day.